It's one of our favorite guests of all. His name is Bert Dolman. He's a fellow Hawaiian. He now lives in Los Angeles, but today he's up in Lake Tahoe, I understand. But Bert is a professional trader, investor, and analyst, but also he's the founder of Dolman Capital Research. And our whole company subscribes to his letter, the Wellington Letter. And I've been a fan of his for 30, 40 years now. And when I was a guy cruising around Waikiki with no money, Bert was always in the news. He's sort of like the Donald Trump of Honolulu, because his forecasts were so accurate. So today, stay tuned, because if you want to know the crystal ball on the world today and what's going to happen to your finances, this is the program. I mean, you have been forewarned. You can start taking action now rather than hope that the next president, whoever it is, be it Hillary or Mr. Trump, will save your butt, because I don't think they can anymore. So with that, Kim, what do you want to say about our friend?
This is perfect timing, because there's just a ton of news out there, and it's funny because our CEO, Mike Sullivan, swears he hangs on every word Bert says, and he's been studying. Last time we had Bert on, he was talking about Treasury bills, and he's out there studying Treasury bills and watching Treasury bills, and our company really pays close attention to what Bert says, because Bert brings just a fresh and a real perspective, and it's not what the financial networks are telling you. It's actually, in many cases, opposite of what you're hearing on the news today.
Yeah, and Bert doesn't sell you stocks, and he sells, like we do, financial education. And the reason we love having Bert, he comes from another point of view. Like financial education is like this big, giant ruby or, a gem with facets to it. And Bert definitely brings a facet to it, but it's probably his best facet is his ability to see the future. Because the things he's been saying are coming true today. And one of his best books was called The Coming China Crisis. And today, China is the biggest basket case going. When China goes down, it'll be like this asteroid hitting the Pacific Ocean. And also is prelude to a meltdown. So everything Bert has been saying is currently coming true. All right, so Bert, welcome to the program. And what's the good news and bad news on the world situation?
Well, Robert and Kim, it's great to be with you today, and from beautiful Lake Tahoe.
So let's start with your favorite stock. Apple?
Well, Apple has, I've been negative on Apple here this whole year, and
but you're probably the only one,
Yeah, I know, and that's always what makes me comfortable in my decision making. When everyone is on one side of the fence, things can only go to the other direction. And when you take a look at Apple, I think there's a good amount of evidence that Apple has now seen a long-term top, and from here on, it's going to be dead money. In fact, I just wrote an article for our website, dolmancapital.com, which said Apple is going to be dead money at best.
What do you mean by dead money?
Dead money, you're not going to make any money in it, and you're probably going to lose a lot of money. Apple now, if you just look at the technicals instead of the fundamentals, we have a long-term top, which stretches out to February of this year. Long-term top, it means every time it got to a certain level, the big money came in and sold it. There were some very big hedge funds, huge amount of money they had into Apple. Carl Icahn had 53 million shares of Apple, and I've been saying for the last year, how is he ever going to get out of this position when the tide changes? And the tide for Apple has changed.
So why do you think that is? That's the most important question, because Apple's been the darling of every amateur. I've been a fan of Steve Jobs and Apple for years.
Yeah.
But I don't buy Apple because I'm not a paper guy. Yeah. But what's wrong? What does Apple mean to you?
Well, basically, for me, it's a one-product company. All the other products that they have are insignificant. The iPad sales are down 34%. The share of the market of tablets is now down about 60%. Apple is a company that has an attitude of corporate arrogance. They think that people should be willing to buy their products at prices twice as high as the competition, and they continue to keep those prices up there. They never cut prices, although the competition continues to reduce prices and have more features than Apple products have. Take the iPod. Nobody even talks about the iPod anymore. They're selling the Nano for $149. There's even an Apple website that says this is almost, what did they say, an insult to price the Nano that high. So you have all these things. You've got Apple Pay, which will never really make any significant money.
And what about Apple Watch? What about the Apple Watch?
The Apple Watch is, you can go to Forbes.com. You can see my article written, I think it was in March, and I said the Apple Watch will be a flop. And now we know it is a flop. So Apple will not even release the numbers on how many watches they have sold because it is such a flop. There's no reason to have an Apple Watch because you need the Apple phone in your pocket.
Right.
But Bert, let me ask this question. So it's a one-product, one-trick pony, as they say.
Yes.
But does it also reflect something else in the bigger picture of the world economy?
Yes.
That's what I'm concerned about.
That's a good point. That is such a good point that we have seen irrational exuberance in the pricing of Apple stock. Here's a company that is worth, it's the most highly valued company on the planet, and all they've got really is, as a big money maker, is a phone. A phone, that's all. So this was worth more than Siemens, than Philips, than General Electric, than Exxon. All of these huge companies that have been in business for 100 years. Apple is supposed to be worth more making only a phone, and every mobile device company in the world is after that market right now, and they're coming out with new products at half the price. And eventually people are going to say, I know I'm caught up in the ecosystem of the Apple, but it's time to get out. I made that decision myself 3 years ago. I said, they're not going to keep me in this ecosystem because everything that they come out with is more expensive and has fewer features. But I got out 3 years ago.
Right. The question is, though, like as you accurately predicted in the coming China crisis, that China is the biggest disaster of all facing the world.
This is the big one for me. When I watch financial TV, I see so many commentators coming on and saying, only 12 or 15% of the whole population of China has stock accounts, therefore the stock crash in China will not affect their economy. That is so totally wrong. They've got about 90 million stock accounts. Those 90 million stock accounts, this is households, it's households, which is about 260 million stock accounts. So because there are many different members in the households. Those are the people that have money in China. Most of the people in China are very, very, very poor. Okay, so the people that have any money at all, the ones that make the economy go, suddenly have lost their money because they were speculating with leverage up to 5 to 1. When you have the leverage of 5 to 1 and you get a margin call, you have to sell 5 times more stock than the size of the margin call. So if you get a margin call where the bank, the brokerage firm says, we need $10,000, you have to sell $50,000 worth of stock just to come up with the $10,000 for the brokerage firm. Now, the government then suddenly came in a couple of weeks ago and said, we're going to prohibit all selling. If you own 5% of a company, you can no longer sell any stock. If you're a member of a brokerage firm, you can no longer sell stock. Then they came out with a rule that said, if you're a short seller, we will arrest you. So you could not sell short anymore. So you can't sell short. What reason is there for anybody to buy a stock in China? There's no reason to buy if you cannot sell.
Okay, once again, it's Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Today we're talking to an old friend from Hawaii, Bert Dolman, but he's also the founder of Dolman Capital Research. His website is dolmancapital.com, and he's talking about, are we on the eve of destruction right now? Is this the big prelude to the crash of the world? So we talked about China, and China is the engine. If China goes down, what happens to the U.S., Bert?
Well, I think all of the major markets in the world will be affected, but that creates new buying opportunities. If you're willing to sell short, if you're willing to make money on the downside of the market, it's a great opportunity. If you're not, then wait a few months until there's a real serious decline in all of the global markets, and then you will see concerted Federal Reserve and central bank action, and you will be wanting to buy and scoop up the bargains. So you're going to see this roller coaster, which will be tremendous for active investors.
And if China's economy goes down, they're the major buyers of all the goods and all the goods around the world, right? So
Kim, very good point. Over the last 15 years, China has bought 60 to 80% of all of the commodity purchases in the world. China has been the locomotive for the global economies. And if that locomotive suddenly stops, what do you think is going to happen to the world?
That's a good question. And that's why when we come back, we'll be talking further to Bert Dolman. Again, he's a fellow Hawaiian, but he now lives in Los Angeles. This is an exciting time, but this is the big time we've been waiting for. Unfortunately, if you're one of those people who believes that all markets only go up, you will be badly burned. If you're investing for the long term, buy, hold, and pray, you may be sadly disappointed. So that's why I appreciate you listening to the Rich Dad Radio Show. And we're not making any recommendations. Your decision is up to you. And today we're talking to a dear friend, fellow Hawaiian, Bert Dolman. He's the founder of Dolman Capital Research. His website is dolmancapital.com. And I highly suggest everybody subscribing to whatever he says, because whatever he has been saying for all of these years, I've followed Bert. He's been accurate. He does not mince his words. His accuracy at the turns of markets is phenomenal. Okay, so for all of you out there who are wondering, what do you listen to this program for, and you're being so negative and all this, look, you got to be a realist, negative as well as positive. This program is about a crystal ball, and we have one of the best crystal ball guys in the world. His name is Bert Dolman, like we said. Any comments, Kim?
Yeah, well, I have a question for Bert just along those lines. And we're talking about, China coming down, the economy going down, yet the media, remember when there was all this media about Greece? Everything was about Greece. There was a station that was watching minute by minute the vote on Greece, and there was all this hoopla about Greece, but there's nothing about China. Why?
Very good question. Before I answer that, let me just go back to 3 years ago. Everybody's so bullish on China. China's going to conquer the world. China's going to be the biggest this and the biggest that. And I said China is going to have a severe problem along the way. And the book was entitled The Coming China Crisis. And you know what's really interesting? We started a newsletter at the same time called the China Boom Bust Letter.
Yeah, I subscribed to it, but it wasn't well accepted, was it?
Exactly. We had it, I think, for about 2 years, and we could not interest enough people in the concept that China was so important to all of the global markets, even if you never wanted to invest in there. And so it was a real educational project for us to tell people, look, we ourselves would never invest in China. I just don't trust communism. And most people forget China is communistic. And so we finally, after 2 years, we said we're hitting our heads against the wall. Nobody's interested in China. And
Bert, I tell you, I loved it.
Well, you're an exception, Bob.
And then when you had to cancel it, I was upset. Because I know exactly what you mean, because Kim and I had a gold mine in China, and they nationalized it.
See, there you go.
That's what communism...
After we found the gold, they took it.
Yeah, and that's what nationalism means. You guys may not know what that means. Nationalism means you have something and the government takes it over. That's what it means. Yeah. It's happening here in the States, too.
I was talking to an old friend of mine yesterday who did a lot of business in China, and he was telling me about Chinese companies that were going public in the United States. When the SEC sent requests for documents to the accounting companies, the big U.S. accounting companies doing business in China, requesting information on these firms to the banks and so on, the Chinese government ordered these companies do not provide any paperwork to the SEC. In other words, the SEC was deprived of all information required to permit a company to go public. And anyway, the companies did go public, and they went down in flames. But this is how it is under communism or any dictatorship. And I think investing your money and my money it's treacherous enough in a free country like the United States rather than a country where they change the rules overnight.
Well, this is what I'm trying to say to everybody. The reason we have Bert on, not only is it for me personally, because I get to see my crystal ball and I get to make decisions about what I'm supposed to do. But you have to look into the crystal ball and figure out what you're supposed to do. Yeah. But, you have been so accurate. You talked about Alibaba was a shell game, right? It was one of the biggest public floats going.
There's a typical example. Wall Street raised $22 billion for Alibaba. And they did it because they had fees of over $300 million for the Wall Street firms. People were led to believe that they were actually buying the Alibaba China firm. No, they were buying shares in a Cayman Island shell company. And the only asset of this company was a piece of paper that said, you are entitled to part of the profits of Alibaba China. It didn't say how much of the profit. The profits were to be determined by the board of directors of Alibaba China.
Yeah, but again, as Kim says, why doesn't that make the news? All you hear on CNBC is, have you got a piece of Alibaba? Are you in with the cool guys? And all this stuff. A bigger question is, what is wrong with our media? What's happening? I don't trust CNBC at all. I know they're kind of good people, but I think they got their heads up their butt. I don't know if they know what's going on. I listen to Jim Cramer, and he talks about like the stock market is some religious organization where they're all saints inside there, and they're a bunch of crooks. But you're the reason I want people to go to your website, dolmancapital.com, DOLMANCAPITAL.com. It's because you want to see what's going on inside the crystal ball that people do not see what's going on. So that's why I have Bert as a friend, always on our program. He's always generous with what he sees. So this is the next question. Is there a correlation right now between Greece and Puerto Rico, which people don't even know where Puerto Rico is? Yeah. It's American territory like Hawaii was at one time. There was talk of Puerto Rico becoming the 51st state, and now it declared bankruptcy. And people say, oh, don't worry about it. It's just like it's like Stockton, California, Vallejo, California. It's like Detroit. Oh, they're just going bankrupt. And people go, well, what does that mean? What does it mean to you that our cities are going bankrupt as now a protectorate's going bankrupt?
Yeah, let me just go back because you asked about Greece as well. Kim's question was, why did Greece get so much publicity and not China? And I believe it's because Greece was the European Union. Americans feel much closer to Europe than with China. China is this mysterious world out there. It's Asia. We don't know much about it, nor do we care about it.
Well,
Europe
the
is
funny
much
thing,
closer to us.
Hey, Bert, great thing about raised in Hawaii, we know the difference between Chinese, Filipino, and Japanese and Korean, right?
Right. That's right. Listen, I loved living there. It was beautiful. I loved the melting pot and all the different nationalities and so on. It's great.
It's changed, though, hasn't it? Hawaii has changed a lot.
Hey, change is constant. That's the world. The world is dynamic. It's not static. And this is what the buy and hold investors always forget. Things change, and you have to change with it. And if you change with it, you can make a lot of money in the market. Yeah. And getting back to the Puerto Rican situation, I think the attitude is just like it is with Illinois. Illinois is basically bankrupt. By accounting standards, the state of Illinois is bankrupt.
But isn't that where Obama came from, too?
Coincidentally, right? And so... it is bankrupt, but nobody's paying any attention to it because
that's what I'm saying.
Going to be bailed out, and Puerto Rico is going to be bailed out.
That's what I'm talking about, Bert. We talk about Greece and nobody talks about China. We don't talk about the U.S. either.
That's right.
That's the point.
And there's so many other areas that have severe problems. If you go to Europe, you take a look at Portugal, you take a look at Spain, Italy, etc. They're all basket cases, similar to Greece. Maybe a little bit better, but things are getting more and more precarious because everything has been papered over with the central banks creating basically an infinite amount of money. The central banks of the world since 2009 have created $13 trillion of artificial money. $13 trillion. Now, My point is, what will prevent them to create another 13 trillion
Well, Bert,
and have it up to 26 trillion?
Let me ask you this question. It's another thing people are not watching that you've been watching is derivatives.
Yes.
Prior to the 2007 meltdown, there was 700 trillion in derivatives, and one of your later reports, you said the derivative market was up to 1.2 quadrillion, not trillion, quadrillion.
And a derivative is, just for our listeners, a derivative?
Just think of derivative as orange juice. Orange juice is a derivative of an orange. So what they did with the collateralized debt obligations and the bad loans in real estate had nothing to do with real estate. It had to do with companies like Goldman Sachs and Bank of America and all that packaging bad subprime loans and selling them as assets. So they took a derivative of bad and turned it into good. Is that basically it, Bert?
Exactly. Yeah, this is what happened in the U.S. in the last cycle, 2007. Up to that time was CDOs. They were pools made up of subprime mortgages. Then Wall Street went around the world and sold participations in these pools. And towards the end, they had synthetic CDOs because they couldn't get enough bad mortgages to put into these. They said, okay, we're going to have a new pool, which is a fictitious pool, and we're going to pretend has the same components as this actual pool that's out there.
Have any of those guys gone?
CDO.
Have any of those guys gone to jail?
Of course not.
Not one.
Of course not.
Not one. And so now, do you know what happened in China here this year? Because they had this tremendous speculative bubble in the stock market. They were doing a CDO type of situation with stocks. Instead of putting mortgages into these CDOs, they put stocks into these pools. And then they sold different tranches of those stocks. So you could buy the safer one, and you would pay more, and you could buy the bottom one, which was much higher risk, was crappy stocks and so on, and you would pay less. These were financed them by the banks at a leverage of 5-to-1.
So very quickly, what do you? Is there anything our listeners can do to protect themselves against this stuff, or is it just too big?
You could make a lot of money. Don't protect yourself. You only want to need protection if you invested in this garbage. Now, now you don't need the protection if you had a brain. Okay, if you were a subscriber to our Wellington letter, you never would have invested in this stuff. Now, who's going to be hurt by this? Who's going to be hurt by the China crisis? I've been saying for the last year, since June of last year, that was the first time that the problems started surfacing when overnight interest rates in China tripled. They went up to 25% overnight. And I said, here it is. They can no longer hide the crisis that's going on in China. And the first problems emerged. And at that point, you knew that something bad was going to happen. When China goes down the drain, the emerging markets are going to go down the drain with China because the emerging markets have China as their biggest customer. And the emerging markets have most of their external debt in U.S. dollars. Now, the U.S. dollar is rising. It will rise tremendously more as the world goes to pot because everybody wants to go to the U.S. for safety. Okay, so that's going to make the U.S. dollar strong. Now, if the Federal Reserve, in its infinite wisdom, makes another monumental mistake in September and hikes interest rates, it's going to exacerbate that. You're going to see the emerging markets going downhill because they cannot service that debt. The debt is getting more expensive for them as the dollar rises, and their income declines because of the China situation. The emerging markets is where you want to sell short. You want to buy the EUM, which is an ETF that rises in price as the emerging markets decline.
Hey, this is all about the crystal ball, and this is the man I listen to, and just because he's been right on the money for all the years. I have followed Bert probably 30, 40 years now. He has been on the money. And he doesn't sell his stocks and stuff. He sells, like Rich Dad, we sell information. And I suggest you subscribe to his letter, the Wellington letter. So once again, this is the Rich Dad Radio Show, the good news and bad news about money. You can listen to this program on the Rich Dad Radio app on your time, on your schedule, available at the App Store. And you can listen to all of our broadcasts on richdadradio.com. We archive them so you can listen to it again. And this is a program you should definitely listen to. So, Bert, as we go into the final segment, a couple of questions. Oil is going down, and most people, Bubble Vision, CNBC, and those guys, this is good news because the American consumer has more money. What's the other side to that about oil price going down?
Well, the other side is the real cause. The cause of oil prices going down is not because OPEC wants to do us a favor. No, it's because of deteriorating economic conditions, which means demand is going on. There's less demand and more supply, and the lower prices go, the more oil is being pumped, because the large oil companies, they say, we have to make up for the lower prices by selling more oil.
Which drives the price lower.
More. So that it's a vicious circle, and that vicious circle won't stop until oil may get down to $15 a barrel or $10 a barrel. That's possible.
Yeah, I understand.
Possible. Not a forecast.
But what happens? What happens
we take it one step at a time using technical analysis. And I said on this rally here, which went to about $60, is that the next step is going to be down to 44, which is the low earlier this year, and after that we're going to go into the 30s. It's inevitable.
But
but the good news is that the consumer pays less. We got a new deal on propane.
But doesn't it keep self creating itself? Because if the demand is down, then the economy is down. The economy keeps to go down. Less jobs. The oil companies are laying off people, so unemployment's going up. Isn't it just going to be this downward spiral?
Exactly, and this is the thing. You have to see what the cause is. Don't look at the ripples. Look at the center where a rock dropped into the water. That's where you want to go. What is that? It's global deflation. All the commodity prices are going down, and as they go down, more commodities are produced in order to make up for the shortfall in profit.
But didn't you say in one of your letters, I think it was you, that Russia needs $100 a barrel to stay afloat?
Oh, yes. A lot of Russia is in deep kimchi, as we say in Honolulu, and they're in deep trouble. And so this is why Russia has cozied up to China. They now have a mutual support act, and so on. It's like two drunks trying to keep each other up, and eventually they're both going to fall down. And no, really, the globe is in terrible trouble. The central banks have really screwed things up royally. You know what people don't recognize is that the big factor out there is that most people, especially retired people, don't have any income anymore.
Right.
So it's not that the purchasing of the power of your money is declining. No, it's what your money is able to achieve in income has declined to almost zero levels.
But Bert,
that is the impoverishment of the world.
But Bert, I think it was you who also said that when the price of oil goes down, the rich get hurt too, because many of them are counting on their revenue from oil production.
Everybody gets hurt.
Yeah.
In 2008, in June, oil hit $149 a barrel. Goldman Sachs on that day came out and they said it's going to go to $200. On that same day, we said this is the top, and from here it's going to go down to $50.
So there was
$149 to $50. People didn't believe it.
Right.
It went down to $38.
And Goldman was on the sell side probably on that one too.
Who knows?
So if you got if you got oil at 50 or 38 or whatever it is, how does that affect the oil industry overall?
It's a disaster.
It means huge bankruptcies in the oil industry, in anything related to the oil industry, and this includes stores like 7-Elevens. This includes the hotel companies that are in the oil sectors. This includes the junk bond market. In the junk bond market, the energy sector is the biggest component of the junk bond market. They raised $210 billion of junk bonds. And in my opinion, they're going to go belly up, all of these junk bonds. And you just wait till the investors in the junk bonds and the ETFs in the junk bonds and the mutual funds that have these junk bonds realize that, and they start selling them or trying to sell them, and they can't find any buyers for the junk bonds.
And once again, it's Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. Once again, you can listen to this program on your time and your schedule. The Rich Dad Radio app, available at the App Store, and all of our programs are archived at richdadradio.com. Our guest today is Bert Dolman. He is my man with the crystal ball. I hope you're seeing the future. We played that song for you. We're on the eve of destruction. Now, all of that said, if the dollar is getting stronger, is that why the price of gold is going down for Americans?
Yes, this is bearish for all the commodities. A rising dollar is bearish for commodities. So what do you invest in? That's a question right now.
That's a big question right now.
Exactly. Now, Kim was asking before, what I invest in and so on. And I'm a trader. I trade short term because I watch the markets during the day. I use advanced technical analysis to tell me when there's short term move coming to an end, and you want to go in the opposite direction. So I can make money whether the markets go down or when they go up. And sometimes I will buy the strong sectors. I will sell short the weak sectors, which is a wonderful way to make money. And if people want to replicate that, all they have to do is subscribe to our Smart Trader service. Smart Trader comes out almost every day. It has very specific buy recommendations and sell recommendations, which is something you don't get from most companies. So we'll tell you when to buy, when to sell, and you can take it or leave it, depending on you. But last month at Freedom Fest in Las Vegas, there were 2,500 people there. Donald Trump was speaking there, and people asked, what is your number one investment? And I said, right now, for what I see ahead, Treasury bonds, long-term Treasury bonds. Now, this is different than Treasury bills. T-bills are short-term, 30 days, 90 days, etc. Treasury bonds are long-term. This will be the safe haven of the world. Now, I said that a month ago, and what has happened to Treasury bond prices? The ETF that I recommended, it's an EDV at the time, it's up 11% in 1 month. A Treasury bond, up 11% in 1 month.
Why is that? What is so good about a Treasury bond? You've been telling this. You've been telling this to us for about 7-8 months now. My CEO, Mike Sullivan, says, damn, Bert is correct. Everything is going. He's tracking you. He says what you're saying is true. Why are people jumping into Treasury bonds?
We've been recommending Treasury bonds actually since the early 2014, when there was absolutely not one person on Wall Street that wanted to be in Treasury bonds. Everybody that came on TV said, you want to be out of Treasury bonds, and you want to be out of them. And I said that. Love it. I love it. I'm into them. And here are the reasons that we like Treasury bonds. And over the next 13 months, the EDV that we recommended, it's from Vanguard, was up 51%. Now, if you could make 51% in 13 months in a Treasury bond ETF, that's pretty good.
Why? But why? Why were you recommending it? What did you know?
Safe haven.
But what does that mean to the average? Look, I mean, I think I understand it, but I tell you, bills and bonds never made any sense to me.
Okay, first of all, when the economies of the world deteriorate, they get slower and slower and slower. That means that fewer and fewer companies are able to make money. Have you noticed that in the last 6 months, while they're manipulating the major stock indices like the Dow Jones, the S&P 500 upward, most stocks have not gone upward. If you look at the NYSE Composite Index, which is all the stocks on the New York Stock Exchange, it's far below where it was in July of a year ago.
Are you saying the stock market is manipulated?
Yes, not only I've been saying it for several years. We just had last week. We just had, or was it this week? Bill Gross from formerly, he's the founder of PIMCO.
Yep.
Yes, he said the markets are so manipulated, nothing is honest anymore. He said that on national TV. So for him to say that, that's pretty good. But anyway, the thing is, when everything is going down, if you have $100 million lying around, the safe haven, you don't want to be in stocks. You don't want to be in private equity investments.
You don't want to be in savings.
They're so overvalued.
You don't want to be in savings.
You don't want to be in savings. You don't trust the banks.
Well, they charge you interest today.
Your mattress gets very lumpy with $100 million underneath it.
I don't have that
so
problem.
Where do you put it? You put it into the safest instrument in the world, and that's a Treasury bond.
And why is it so safe?
Because the government stands behind it, and the government has made the promise. And we all believe what all the politicians say, right?
Well, are you still recommending?
That what's really behind it is the Federal Reserve. The Federal Reserve has the power to print an infinite amount of money.
Okay, so are you still recommending the EDF by Vanguard?
Yeah, EDV is the symbol.
EDV.
There's another one called the TLT. That's not Vanguard. There's another one, TLO. It depends. EDV is more volatile because it contains zero coupon T-bonds. You can look up what that is. And so it's more volatile. So if you want something less volatile, look at the TLO.
And the EUM for emerging market short.
Yeah, and let's always remember, any recommendation is only good until it changes. Okay.
That's a good point. Yes.
So
good point. You got to pay attention.
The world is dynamic.
Yep.
There's nothing static in this world. We have 4 seasons in a year, and each season has a different temperature. And you don't want to be running around in the middle of summer in Phoenix, Arizona with a fur coat on.
No, you do not.
Hey, Bert, to finish up here, I want to talk about my friend, Donald. So anyway, he's been saying things, but he still goes up in the polls. But, last 4 years ago, Rick Perry was leading, and now he doesn't even make the stage. So what are your thoughts on Trump? You said he had a standing ovation at Freedom Fest and all that. What do you think?
I noticed that going into this ballroom before his speech, about 2,000 people were going into the ballroom. I noticed all the people around me, everybody was kind of chuckling and making derogatory comments about him and so on. Basically, they didn't care for the guy. When he was done speaking, he got a standing ovation, and everyone around me, everyone walking out, couldn't help but talk positively about what he had to say. He said, people said basically, he is saying what every American is thinking. And this is what we have to focus on. Yes, we all misspeak in interviews and speeches sometimes. And what he said about McCain and so on, I'm sure we know what he meant, but he didn't say it in the right way. And probably he should have
He didn't explain
apologized.
it.
Yeah, but, it's different. But what we have to focus on is the big things in life, the big things having to do with the future of our country and where we are going. Right now, we're heading towards a system of a kleptocracy. Kleptocracy is when the guys in power in Washington steal all the money from the rest of the country.
Yep.
Everything is for themselves. Nobody's there looking out for the interests of the country and for the average American.
So do you
and
think
here
Trump?
comes Donald Trump.
Yeah. Do you think
And
he would be
said
good?
that-
Do you think he'd be good for the U.S. economy?
I don't know. I don't know how he would be as a president, but this is why he's popular. This is why I compared him to Reagan. I remember when Reagan was going for the nomination, and you could hear only negative things about Reagan, and much of it was made up. And I was speaking at a conference at the Fontainebleau, Miami, that evening when he was nominated. We had a press conference in our suite, and they asked me to come on TV, live TV, 10 o'clock that night. And the media only wanted to hear bad things, and they thought I would help them. And they said, but isn't it true he wants to cut back on welfare, and then all the elderly will be eating dog food?
Oh, I remember that. Yeah.
And I said, no, only dogs will be eating dog food, And, but that's how it was. And then the Republican Party, who had been fighting him tooth and nail, because they wanted Bush in there, they finally had to settle for Bush becoming vice president.
Right.
And that's what happened. And we're in the same situation now.
And we're now coming in to Ask Robert, and you can submit your questions at richdadradio.com to Ask Robert. And I want to thank Bert. He's always entertaining. He always gets me thinking. So that's why I thank Bert, because happy days are over. And I do agree with him, is that this is not a time to expect that the economy will be like it was in 1970 or 80. It's all a different economy today.
And Bert is also, he's all about education, and I would recommend you maybe want to listen to this program again, because he actually mentioned some specific ETFs and things to invest in. And even if you don't invest, it's a great education to watch what's happening with these specific bonds and specific ETFs, and so you'll just increase your education.
Yeah, and that ETF, the EUM, was really about the BRICS, Brazil, Russia,
emerging
India,
markets.
China.
Yeah.
So, Melissa, what's the next question, please?
Our first question today, Robert, comes from Tobago in South Africa.
South Africa. We were just in South Africa.
I was just there
we
a
love
couple
South
of days ago with
Africa.
Kim.
Go Springboks.
There you go. His favorite book is Rich Dad, Poor Dad. He says, Robert, if you had control of the money supply, what would you do?
That's a fantastic question, because that's the question everybody should be asking themselves. If you controlled the money supply and you saw what's going on in the economy, would you cut it off and we go into a depression, and then there would be anarchy? Or when we go into a depression, you start printing. So the big tectonic plates, the tug of war is between depression and hyperinflation. If we go into depression, which I think we will, At that point, the central banks, like the Fed and the Japanese banks and the Chinese and the European Union, that's when helicopter money will show up. They will print. So they'll try and print the way out of a depression. So, but if they cut money and they stop printing, like the most important precious metals will be gold, silver, guns, and bullets, okay, because there will be anarchy. So it's not a very pretty picture, and somewhere in between depression and hyperinflation lies the truth. So the people that control the monetary system of the world have the power of that in their hands. So if Janet Yellen says, we're not going to print any more money, it's depression. If they keep printing money, it's hyperinflation. Neither are that good.
And one other point I want to make to Tobogo, he's asking, if you control the money supply. He does control his money supply. He controls his money supply of his family. So everything that we're talking about, you pay attention to what's happening globally, but also what are you doing within your family to control your money supply?
Yeah, and the point is the reason the Rich Dad Company has been formed is our education system is obsolete.
Yes, it is.
They're still telling you to go to school. They have no financial education. Why would you go to school? And they tell you to save money. Why would you save money when they're printing money? Then they tell you to invest for the long term in the stock market, and they have HFT, high frequency trading. You're sitting there holding long, for 40 years so you can retire. And HFT means they're trading in microseconds. A microsecond is a millionth of a second. Or they're trading in milliseconds, which is a thousandth of a second.
And they're trading against you, right?
And they trade against you. So Goldman Sachs and the big banks and all that, you give them your money to invest. They put it into what's called a dark pool. And the HFT guys, the high-frequency traders, just rip your money apart. The very guys you trust your money to, they trade against you. And it's perfectly legal. That's why nobody's going to jail. Next question, Melissa.
Our next question comes from Joseph in Kansas. Favorite book, Unfair Advantage. He says, I don't know if I understand your statement, capitalists can print their own money. Is that more a true statement than capitalists know how to create wealth, or is it a combination of both that is the most accurate?
It's actually a combination of both. It's a great question, but when I talk about printing money, that's what Kim and I do, because we don't save money. Let me give you this one example. In 1970, when I came back from Vietnam, if I put $1 million in the bank, I got 15% interest. That was $150,000 in interest. You could live on $150,000 a year in 1970. If I put $1 million today at 2015 into the bank, I might get $10,000 interest. That means if I'm a pensioner and I'm living on $10,000 a year, I could be $1 million in the bank and still be going below poverty line. That's why you shouldn't save money. So what Kim and I do is we use debt. You see, you can use debt to consume. Like you can use your credit card to go out and shop and buy some new shoes or go to dinner. Or you can use debt to acquire assets that produce cash flow.
So
that's the difference. When I say print money, Kim and I receive a lot of money every month on no money because we're using your money, debt. So every time you put money in the bank in your savings account, or you invest in a long time in the stock market, or you buy an insurance policy, they give us your money so we get rich. The key to life is to use OPM, other people's money, to print money for you. That's called cash flow.
And also, you talk about capitalists printing their own money. I mean, we create assets. So out of nothing, you create Rich Dad, Poor Dad. You write this book, Rich Dad, Poor Dad. Who knew it was going to be?
It's a true story, but it was out of nothing.
Well, I mean, it was out of your head. But who knew it would be the success it is? And now it's a major asset. So starting from nothing, we create this asset, and it's like printing money.
Yeah, and we finance
Same with the cash flow board game.
Yeah, we raised capital for the Rich Dad Company. We raised $250,000, and we paid all that money back. So today, all the millions we're making, we have no money in the deal. That's what I mean by printing money. And then we take the money we make from Rich Dad and we buy more real estate with Ken McElroy, and Tom Wheelwright, the Rich Dad advisor on taxes, tells us how to pay no taxes. That's the game. But unfortunately, they don't teach you that in school. Next question, Melissa.
Our next question comes from Luke in San Antonio, Texas. Favorite book, Rich Dad, Poor Dad. It says, Robert, as a graduating medical student with over $200,000 in student loan debt, What is your advice to those students who are going into the higher income, higher taxed fields such as law, medicine, or engineering? I love what I do, but I don't want to be an employee any longer than I have to.
Well, great question. It's not about being an employee. It's how do you serve humanity, and congratulations, because you'll actually be in a great position simply because most medical guys of my age are getting out simply because they're sick and tired of the insurance companies running medical industry. But the way you do that, again, is financial education. And one of the things you may want to look at is Tom Wheelwright's book, his Rich Dad Advisor on Tax-Free Wealth. Since you'll be making a lot of money, your job is to get your income into the asset column under the guidance of Tax-Free Wealth by Tom Wheelwright's book. At that point, you'll know which asset class to invest most in. Kim and I love real estate, and Tom will tell you it is the last remaining tax-deferred best way to make a lot of money without paying taxes. So you've got to convert the income you make as a professional doctor, attorney, and all that into passive income as an investor. Remember, there's 3 types of income: ordinary, portfolio, and passive. If you save money, it's ordinary money. If you work for money, it's ordinary money. You put your money in a 401k, it's ordinary money. It's the worst thing you can do. What they're telling you to do is the worst advice. Go to school, get a job, work hard, save money, and invest for the long term in the stock market. You've really got to convert your income to either passive income or portfolio income. Kim and I invest primarily in portfolio income because we control taxes and debt on it.
And Luke, I'll say 2 things. One is we love San Antonio. It's interesting that you're a medical student in
Yes,
San Antonio.
God bless you.
We have a lot of apartments in San Antonio, so
Several
it's a
thousand.
great place. So you're in the right place. And one other story, real quick. I met a gentleman in London, and he was a medical doctor, and he said after reading Rich Dad, Poor Dad, it really changed his point of view. And so he loved the medical profession, but then he went into medical devices, and he started building businesses creating medical devices. So today these businesses are giving him lots and lots and lots of income, but as assets and as business owner, not as an employee. So in the medical world, there's other ways to do it as well.